What's up, everybody? Today I'm going to be going over everything that I use in my strategy, which has about a 70 to 80% win rate. All right, before I get started, I do want to say everything I am about to go over is in my pre-recorded course and is taught daily in my trading community. You guys can click the links below if you are interested in those. All right, so let's get started. The first thing you guys need to know are definitions. All right, so these are literally the only things I use when I trade. So first we have order blocks. We have breaker blocks. Oops, breaker blocks. We have imbalance. We have buy stop liquidity. Oops, and I'll fix that in a minute. And then we've got sell stop liquidity. Okay. All right. And then we also have failed swing lines. All right. So some of these may look familiar to you. They may not, but this is all I use in my day trading strategy. So the first thing you need to know is an order block, right? What is an order block? All right. Well, the simplest way to define an order block. So first you have two types of order blocks. You have a bullish order block and a bearish order block. So a bullish order block is the last down candle, right? The last bearish candle before bullish momentum. And then you also have your bearish order block, which is the last up candle, right? The last bullish candle before bearish momentum. All right, and I'm going to show you guys exactly what that is right now. So if you go to an empty chart, right, you can clearly see here, this is the last down candle before bullish momentum. All right, so let's just say like this is all we saw. All right, this is all we had. You would draw this one from the body to the wick because the size of the candlestick body is so small. And just to add in, you can draw order blocks from body to body, wick to wick, or body to wick. It really just depends on the size of the candlestick body. All right, but just to keep this short and simple, I'm just going to draw this one from the body to the wick. It is the last down candle before the bullish momentum. Momentum because the momentum should be bigger than the last down candle. All right, so we can see that there. When it comes to bullish order blocks, you want to wait for price to trade back into them for buy entries. All right, so this is where patience comes into play. You want to get your entry somewhere around here. All right, so fast forwarding. Boom, look at that. Entry would take place around here. I like to get my entry no more than 10 points away from the order block because that does affect my stop loss. And then look at that. It continued to push up. All right. Another fun fact is my stop loss is always 50 points from my entry. So I want to make sure that I'm getting that accurate entry and not too far away from that order block. All right. So that is a bullish order block. All right. So now when we come to bearish order blocks, remember, they are the last up candle before bearish momentum. All right. So here we have one right here. And as we can see, it actually rejected the area twice for sell entries. So if you would have drawn it before it came back to it, you would have had to be patient and wait for price to trade into it. And look at that. It traded twice into it and completely took off. So those are order blocks. Again, that is something I use periodically in my trading strategy. Okay, I think oops, yep, I definitely deleted everything else that I just had. It's okay. All right, so the next thing that we have is, so we've got the order block, right? And I'll rewrite it so you guys can see it. So we've got the bearish OB, the last the last up candle before bearish momentum. You want to wait for a price to trade into these for sells. All right. And then you have the bullish OB. All right. That is the last down candle before bullish momentum. You want to wait for price to trade into these for buys. All right. So the next thing we have is a breaker block. Okay. So what a breaker block is, a breaker block is a previous order block that has been disrespected. All right. So what that means is if a bearish OB is disrespected, that means price has closed above it and we now look for buys. Right? Because an order block can only be respected for bearish if it taps off the bottom of it, right? And keeps selling. But if it closes above it, it's been disrespected and now we look for buys. Okay. So if a bullish OB is disrespected, that means price has closed below it and now we look for sells. Okay. All right. And I'll show you guys exactly what that looks like. All right. So let's find one. Let's find one that's actually been respected. Okay. Here we go. All right. So here we have it here. We can clearly see this is an order block. The last up candle before bearish momentum. Price has been respecting it, right? Let's slow this down. So as soon as price closes above it, right there, it became a breaker block. Right now, obviously, you would have other confluences along with it. That would probably make you go for these buys. But this just confirms like, okay, it wants to buy. All right, it closed above it. So now instead of using it as a bearish order block, we're going to use it as a breaker block for buys. So you would look for entries off the top of it now for buys. All right. And look at that, price rejected the area, and this is where you would get your buys. All right, so that is a breaker block. All right, so when price breaks a bearish order block, it becomes a breaker block to look for buys. All right, and then it's vice versa when it comes to breaker blocks for sells. So let's just look at this one here. All right, so this was the last down candle before this bullish momentum. Price completely disrespected it and closed below it. So then I look to see if price is going to come back to this area for sell entries. All right, so let's keep it going. And look at that beautiful rejection off of this area for those sell entries. And this trade actually pushed 259 points after it came and tapped that area again. All right, so that is what a breaker block is. Just remember when it breaks, when a bullish order block is disrespected, you're now looking for sells. When a bearish order block is disrespected, you are now looking for buys. All right, so that is something to, that is key and that is something to remember. All right. The next thing I use in my trading strategy is let's talk about sell stop liquidity. You'll probably also hear it as sell side liquidity, literally pretty much the same thing. I'm giving you guys everything in simple terms. Okay, so sell stop liquidity is when an area of sellers are struggling to break and close below an area. This lets us know liquidity resides below, which means price may be drawn into the area below. Use this as a confluence to sell. All right. All right, guys. So I'm going to show you what that looks like. All right, so an area where sellers are being stopped multiple times. And when I say multiple times, I mean 3 or more times. All right, so look at this here. Let's say this didn't exist. I could clearly see sellers are struggling to break this area. Remember, sell stop liquidity is never one price point, but it's initially an area. Price is struggling to close below this area. So that lets me know a few things. That lets me know that price may be drawn into this area. Buyers probably have their stop losses below this area. And it lets me know there's liquidity below that price potentially could be drawn to and want to take. The goal of sell stop liquidity for me is to ride with price as it goes to take that liquidity. All right, so if you look at that. As soon as price closes below, the liquidity has been taken. Okay, now it's important that you label what time frame you found the liquidity on. So let's say I found that liquidity on the 4-hour time frame, just in case it looks different when I scale down. I know that the liquidity is still there. So what I would want to do for this one is I would have wanted to get an entry off of this breaker block right here to one to ride with prices it takes to sell stop liquidity, 2 because it's rejecting the order block. All right, since that's all we talked about so far. All right, so that is what sell stop liquidity is, an area where sellers are being stopped multiple times in an area. All right, so buy stop liquidity is literally the opposite. All right, it is an area where buyers are being stopped multiple times in an area and struggling to close above it. Okay. This lets us know price may be drawn into the area above. I'm typing too fast. All right. All right, let me just make this a little bit better. All right, there we go. I just want to make this a little bit more readable for you guys, just in case you're taking notes. All right, there we go. All right, so let's talk about buy stop liquidity. All right, and again, you can find everything that I'm talking about on literally any time frame. Okay, so here's some right here. So let's say this is all we have, right? So right now I see that there's 2 areas where buyers are struggling to break. All right. So I'm looking to ride with price as price potentially goes to take the liquidity above these areas. All right. My entry trigger is an order block. This is the most recent order block below price that I'm looking for buys at. The last down candle before bullish momentum. I would look to get my entry here, right? And again, I'm on the 1-hour time frame, right? So let's just say, look at that. All right. So my entry would take place here. All right. Well, price has already traded 175 points. So, or 77 points. So I would already have most of my profit secured. Stop loss would be in profit, right? And then as you can see, if we keep going, this buy stop liquidity area was taken because price closed above it. So now it's only this one that price hasn't taken. And then clearly it wasn't ready to take that, right? Other confluences come into play, but that is how you use buy stop liquidity. Okay. All right. Next, I have let's do failed swing lines. All right. So when price makes higher highs and higher lows, that is price failing to swing lower, meaning price is buying. Okay. Then when price is making lower highs and lower lows, that is price failing to swing higher, meaning price is selling. And all this is what I use, right, to enter trades, right? So let's find something again. All right, so let's see. All right, here we go right here. I see that, like, let's say this is all I saw, right? So I see that price is failing to swing lower, right? It's struggling to close below this low. This struggle to close below this low. This struggle to close below this low, right? It doesn't have to be perfect. Again, you can find it on any time frame. I also have an area where buyers are being stopped multiple times in this area, letting me know liquidity may be drawn above. The last thing I'm looking for is an entry off the most recent order block below where price currently is. This is the last down candle before that bullish momentum that I look for my buys off of. Look at that. All right. Oops, there it goes. So look at that price. Boom, you get your buys there. Price kept failing to swing lower. It took the liquidity and took off, right? So that is literally how I use my strategy, right? That is a failed to swing lower line. All right. And then a failed to swing higher line would literally just look something like this, right? Price is failing to swing higher. All right, so if this is like, let's say just zoom in. Let's just zoom in and use this. So if this is the high, this high is struggling to close higher than this high. This high is struggling to close higher than this high. This high is struggling to close higher than this high. This high is struggling to close higher than this high. So it's literally just struggling to create new highs, right? You could use order blocks, right? As you see that price is failing to swing higher, find an order block within that to get a sell entry off of, and look for other confluences like this right here. Price is struggling to close below these areas with sellers being stopped, letting me know liquidity also resides. Okay. And then last but not least, the other thing that I use is imbalance. All right. So we have bullish imbalance is when price makes a strong impulsive move to the upside of the market with little to no sellers involved. All right. This can only be filled with a bearish market. All right. So this is a confluence to sell. All right. And then bearish imbalance is when price makes a strong impulsive move to the downside of the market.
Markets are open.
With little to no buyers involved. This can be filled with a bullish market. All right. And this is a confluence to buy. All right. So now let's go and look at an example. Again, you can find imbalance on any time frame. All right, so to find an example of imbalance is right here. Look at this candle. This is a strong impulsive move to the upside of the market with little to no sellers involved. The only way it can actually be filled, and I consider the imbalance to be filled, is with a bearish market. So I can drag this out and I can clearly see price filled the imbalance, but it only filled it with that bearish market. All right. Again, you can use this as a confluence, a reason you would be entering a trade. All right. It could be the reason you enter a sell. All right. And then the same thing with the bearish market. All right. So you're looking for imbalance. Look at that. Strong impulsive move to the downside of the market with little to no buyers involved. It can be filled, look at that, with a bearish market. That could be one of the reasons you enter this buy, right? That could be a reason you enter the buy because you have imbalance to fill, price is failing to swing, and it rejected off the order block. I like to have at least 3 of the confluence I talked about present. Okay, so one last thing just to help you guys out if you're a little confused on what confluence is for what. So a biconfluence is a rejection off a bullish OB, rejection off a disrespected bearish OB turned breaker. All right. BSL above price, which is buy stop liquidity. Imbalance or bearish imbalance, I should say. Bearish imbalance to fill. And then 5, price failing to swing lower. All right, so those are your buy confluences. All right, and then next you have your sell confluences. All right, so you have a rejection off a bearish OB. You have rejection off a disrespected, bullish OB turned breaker. 3, you have SSL below price. You have bullish imbalance to fill. And then price is failing to swing higher. All right, so this is what I use in my strategy. This was just a quick breakdown. Obviously, if you want something more in depth, I have free content on my YouTube, or if you want a pre-recorded course, I have that as well. Or if you're looking for some more live sessions, I do live sessions Monday through Friday with my trading community. Make sure you guys click the link in the comments and like and subscribe.